Well, if you want to talk about repatriation, I mean, U.S. Representative Alex Mooney followed up, got his question to the Federal Reserve a few months ago. He asked the Fed Chairman, Jerome Powell, have there been repatriations of foreign central bank custodial gold at the Federal Reserve Bank of New York in recent months? Powell was pressed about this, I guess, a second time, and he finally acknowledged Mooney's inquiry, but he didn't answer the question. Have central banks been repatriating gold from the New York Fed? The Fed will not answer the question. What does that tell you? It tells you something is happening that is very sensitive, and the public must not be allowed to know about it. The true location and disposition of central bank gold reserves are secrets far more sensitive than the true location and disposition of nuclear weapons, because nuclear weapons can only destroy the world. But with enough gold, you can control the world. You can control the world by controlling the value of all capital, labor, goods, and services in the world, and control the value of all currencies, because the value of currencies is the reciprocal of the gold price. The central banks around the world, seeing what the United States has done to Russia during the war with Ukraine, and seeing how the United States is putting these economic sanctions on everybody that does not comply with U.S. foreign policy, they realize that, hey, our independence, our freedom of action, depends on our reducing our position in the dollar and U.S. government treasuries. Now, they're waking up. GATA has been trying to wake up the retail market in the West and around the world for a long time to this very point. I don't think we've had much success, but I think we have had success with other central banks. I'm very confident that GATA's work had a big influence on the Russian policy with gold, the Chinese policy with gold, and the policy that other central banks have had with gold. We've had some consultations with central banks over the years. In fact, I think it was back in 2006, 2005, the deputy chairman of the Bank of Russia, Oleg Mozaiskov, gave a speech at the London Bullion Market Association summer conference in Moscow, in which the only words in English he spoke were Gold Antitrust Action Committee. And that struck us as particularly remarkable because, to the best of our knowledge at that time, we'd had no contact with anybody in Russia whatsoever. I had some correspondence with Mozaiskov after that, and he was gracious enough to give me an English translation of his speech, and that's on our internet site. Now, he didn't exactly say that GATA is perfectly right about the manipulation of the gold market, but he made remarks, I think he said something to the effect that the gold market was kind of enigmatic and didn't always seem to be following the ordinary laws of supply and demand, and he mentioned GATA in that context. So I think he was letting the London bullion banks know that Russia now was fully aware of how Western governments were trying to manipulate the gold market in order to support Western currencies and to exploit commodity exporting countries like Russia. Well, the Basel III regulations have been construed to prevent bullion banks in London and elsewhere from issuing more gold derivatives than they have real metal to back them up. That's a sea change in the gold market. That, I think, pretty much has been knocking the London bullion banks and other bullion banks out of the gold derivative business and definitely reducing the amount of paper gold floating around in the world. And the implementation of Basel III seems to have correlated fairly closely with the rise in the gold price above $2,000 an ounce. So I'm inclined to think that the regulations really have had a very big impact on the gold market, but there are ways of getting gold derivatives into the market without using bullion banks, without getting the bullion banks to have to extend their own credit behind the gold derivatives. And Gold swaps through the BIS is one way. I think governments could open or run accounts through other banking institutions and get derivatives into the market that way. In fact, I think that much of the gold trading and the silver trading that gets attributed to big banks like J.P. Morgan Chase and HSBC and Citibank, I'm morally convinced that that's really government trading. It's just the government going through intermediaries to intervene in the market. If you look closely at Bloomberg's coverage of one of the spoofing trials in New York, buried at the bottom of one of its reports was that evidence introduced in the spoofing trial showed that J.P. Morgan long had been trading gold directly for central banks. There was an interview I think two interviews that Jamie Dimon did, and then Blythe Masters, who was then running J.P. Morgan's commodity desk at the time, saying that they had no position. The bank had no proprietary position in the silver market, that it just was trading silver for clients. Journalism being so mediocre, financial journalism being so mediocre, nobody followed up by asking either of them, well, who are these clients? Is J.P. Morgan trading silver for the U.S. government or other governments? Never got asked. But if you read one of those Bloomberg stories about the spoofing trial of the Morgan executives in New York, you find that there was evidence introduced that J.P. Morgan Chase long was trading gold directly for a number of central banks. So I argue that the bullion banks have been acting as intermediaries for government trading, and I think that's been happening in the silver market. I can't prove that, but I can show you the stories saying that Morgan was trading gold directly for governments, and that came out in the spoofing case. So all these complaints that people make about bullion banks manipulating the price, I think they're missing the point. Bullion banks aren't doing it. It's the government doing it through bullion banks. And in fact, the Gold Reserve Act of 1934 explicitly gives the U.S. Treasury Department the power to intervene surreptitiously, not just in U.S. markets, but in any market in the world. You go to the group that runs the major commodity exchanges in the United States, you find they have something called their central bank incentive programs, which gives volume trading discounts to any government or central bank that wants to trade futures contracts in the United States, as long as they trade through a exchange-approved broker. And all this trading is surreptitious. All this manipulation conducted through intermediaries is perfectly provided for and is perfectly legal. When Gatta and Congressman Mooney asked the Commodity Futures Trading Commission, does the commission have jurisdiction over manipulative trading in the futures markets that's undertaken by or at the behest of the U.S. government? The commission repeatedly refuses to answer that question. Well, then you know what the answer is. No, the commission does not have jurisdiction over manipulation of the futures market undertaken by or at the behest of the U.S. government when it's undertaken through intermediaries. The bullion banks are just running government trades. The Basel III rules don't make the paper market go away. They essentially make it prohibitively expensive for the usual bullion banks to participate in the paper market by issuing more gold claims and credits than they have real physical metal to back them up with. That doesn't make the paper market go away. It doesn't prevent any financial house from issuing gold loans or gold claims, but it does destroy the major mechanism of creating paper gold that has been operating for decades. If I was a central bank wanting to continue to control, manipulate the gold market, how would I do it? I'd have to think about that. But if I was part of the Federal Reserve or the U.S. Treasury Department, I'd have an easier time about it because they are authorized to create money to infinity. And with infinite money, I think you could do just about anything. You could even make me look handsome.